Good morning, good afternoon, good evening, depends on wherever you are. I think I've done my greetings and welcome to our P7. Of course, one of my favorite topics ever, and I really enjoy doing audit. Um, it's just fun to even think about it and see like how you can be checking people's work, you can intimidate people and stuff like that. It's a very interesting topic that I would like to talk about today. Anyhow, uh, this is the syllabus that we're going to be following from today onwards. We have the syllabus A, B, C, D, E, F, G. So we have about 7 pieces cut it down into, the whole syllabus has been cut down into 7 pieces. Actually 6 pieces. The 7th one is called current issues. That is still optional. It depends on you guys, because one of the optional questions in P7 will talk about current issues. So if you're not very sure, or if you think that you do not want to take other questions and you still want to take current issues, that is up to you. I would cover that part of the syllabus as well, but that actually is a very optional thing to do. As you can see, the syllabus for P7 is fairly small. I'm going to go through with you guys a bit slowly so that you guys can understand. I'm going to assume that this is the first time you both are taking these papers, all of you are taking these papers. And I hope that I make these things easier for you. I'll give you assignments, I'll do some questions with you as well once we get a chance, and I'll try my best to have at least 2 recordings a week and cover as much syllabus as I can. Having said that, I think this is a fairly long introduction. I'm going to stop talking now and I'm going to dig right into the international regulatory framework and why do we need to have standards and regulations. Okay, the regulations come in 4 different ways. Number 1, ethics. Number 2, standards. Number 3, regulation itself. And number 4, statutory. Now, what's ethics? Is it compulsory by nature, by law? No, it's not. And standards, do you think they are compulsory? Standards are compulsory, yes. They are something that you need to follow no matter what happens, right? Regulations are, okay, standards are basically from an institute, like ACCA has their standards. IFAC have their own standards. International Accounting Federation have their own standards, and every institute, every organization have their standards that you have to follow only if you're a part of that organization. That's what a standard is. On the other hand, a regulation is a regulation of a district. Like if you're living in a part of a country, the regulation of that part of a country could be different from another part of a country. Like giving you a very broad example, in America there are states where marijuana, weed, is legal, but nationally it's illegal, right? That's a regulation. That's a very good example for regulation. Then we have statutory. Statutory is basically a law that has been passed through summit, or how do I explain it to you nicely? It's a law that has been passed in the court. Something happened, and due to the consequences of that thing, you pass the law making sure that thing never happens again, right? So here are some boards that I talked about. There are public interest overseeing boards. Just read through this, and if you should have any thing that you do not understand in this topic, let me know. It's fairly unimportant. You don't really have to know these things, but just keep these in the back of your head, just to know that you can score maybe 1 mark by just knowing this. You know, maybe, just point it out sometime. So let's talk about a public interest oversight board. I just said that word in the previous audio. Now, a profession has a responsibility to the public. Now, if we are the auditors, we have a responsibility to the public and to stakeholders and to the shareholders of the company itself, right? So the Public Interest Oversight Board will ensure that the auditing standards and the auditing assurance standards are met. They are overseen by IFAC. The standards need to be high in quality. They need to be clear and usable. You can't possibly say that, hey, I'm going to audit a supermarket. And then instead of auditing a supermarket, what happened? Yeah, When you go for the audit for a supermarket, you will take a sample, you will take huge samples. But you can't check everything one by one. You go to I'm an auditor, I go to a supermarket, do you think I'm going to count all the chocolates in the aisle? I don't think so. I'm not going to do that. So it needs to be usable, it needs to be realistic, all right? No matter how good you can be at that, but try to make it realistic. If I sit down here and start teaching this lecture for, I don't know, another 58 minutes, do you think you're going to be hearing all this for 58 minutes, what a public interest oversight board will do? I highly doubt that. And if you say yes, I would assume that you're just being polite. Okay, and moving on to audit committees. What are audit committees? Now, the structure of a committee is something like this. There at least needs to be one member should have recent and financial experience. There are a few committees. There's a remuneration committee, there is an audit committee. We'll talk about these committees later. I'm pretty sure you guys have studied this before in P1, P3, F8, and these type of papers, right? I'm very sure you have studied this before, but just so you know what's the structure of a committee, there needs to be at least 3 non-executive directors. In smaller companies could be 2, but any one of them, even if it's 2 or 3, you need to have one person who has financial experience, who is used to be a chartered accountant, or he is a chartered accountant, he's a retired chartered accountant. So what's the role of the committee to improve your financial reporting? I'm sorry, it's a boring lecture. I'm trying to make it short to make sure that you guys don't get a drag of it. You will say, hey, this is the most boring thing I'm studying. I'm sorry about it, but just keep these things at the back of your head. We'll come to more important things, we'll come to more interesting things hopefully very soon. So the first thing that we are talking about to improve the quality of the financial reporting. So you have an internal accounts department. If the committee will review the accounts on a monthly basis, it will become very easy for your accountants to know that they want to be, they're being overlooked. They want to make sure everything is fine. If you're working in a hospital, do you think the accountants in the hospital, do they really care if they provide for something, if they do some accruals and stuff wrong or something like that? Some very basic misconceptions. Do you think they'll be fine with that? Yes. Doctors are not going to come and say, hey, you didn't depreciate for my microscope. I don't know. Do even doctors use microscope? I have no idea. If you have some siblings who are doctors, please refer them to me. Not that I need a doctor, just that I want to know what they really use. Although I despair doctors. Anywho, to increase the confidence in public, most of the things, okay, let me tell you why did we used to study P1. It's a funny topic. I used to say to everybody, why do we study ethics and stuff? As you guys would have known, I'm doing CFA. It's a chartered financial analyst. It's a really good certificate that I'm earning. I'm trying to earn actually. And when I took the first book, I saw that half of the book is basically just telling us about ethics. And at that time I realized that why do people even teach ethics? The reason people teach ethics is for the public to get some confidence in us. We studied F1, we studied P1, we studied P3, we studied ethics in literally half the papers in ACCA. Why? Because ACCA knew that if the outer people, like people from a bigger organization, they will see us studying ethics so much, they will get confidence in us that we are good people, Anyway, I'm not going to drag on this for too long. Read through these, and then of course the committee will appoint the external auditors. Very, very common all the time. There are some advantages over here. Just read them through for me, and if you have any questions, some specific questions, say, well, I don't understand what frees up the executive time. What's that supposed to mean? I'll explain it to you later, okay? Just mention that and I'll explain it to you. So there are some disadvantages of the committee. It can cost you a bit extra. They can give you a lot of detail. They can be a bit of a pain in the ass, I suppose, and stuff like that, right? So communication with the audit, why does that external auditor speak to the audit committee first? Because non-executive directors are not a part of the company. So if there's something wrong in the company, the auditors will feel more comfortable speaking to the NEDs, the non-executive directors, rather than going to the company's employees first, because they are most likely to be involved in this thing. Of course, yeah? Okay, having said that, I think I can see over here that there's A2 that we'll be studying now. So I'm going to stop my recording here and I'm going to come back with money laundering. Money laundering is beautiful. I'm going to give you an introduction hopefully later. So thank you so much for listening, and I hope I will see you guys soon enough.